What if I told you that one of the most incredible investment track records of the last, 4 decades didn't belong to some Wall Street whiz, but to a career politician? Well, today we're diving deep into the legendary and, let's be honest, controversial portfolio of former House Speaker Nancy Pelosi.
So let's just start with this one number you see on the screen. It is staggering. Over her 37 years in Congress, the total return of the Pelosi investment portfolio is estimated to be a mind-bending 16,930%.
And to put that into perspective for you, this wasn't just, beating the market. Look at this chart. Her portfolio's growth didn't just beat the Dow Jones Industrial Average. It absolutely crushed it. We're talking a return that's more than 7 times greater. Right, so how is that even possible? How does a member of Congress end up with returns that are right up there with Wall Street's biggest legends? That's really the big question we're going to unpack here, looking at the strategy, the timing, the whole shebang.
First off, let's just really get a handle on the sheer scale of this performance. It's so big, it's earned her some pretty memorable nicknames, like the Queen of Capital Gains, and even, get this, the She-Wolf of Wall Street.
And just look at this comparison. Her portfolio's compound annual growth rate has consistently been somewhere between 21 and 25%. Now, to be clear, that doesn't just beat the market. It actually edges out the long-term performance of the investing world's absolute gold standard, Warren Buffett. And this isn't some ancient history either. The outperformance has actually been speeding up lately. The data shows that in 2023, the portfolio returned around 65%, when the S&P 500 did 24%. And in 2024, the gap got even wider, a whopping 71% against the market's 25%. So, this all leads to the billion-dollar question, right? How? What is the winning playbook here? Let's break down the core strategy that's been generating these insane returns. Okay, so the strategy, which sources always note is executed by her husband, the venture capitalist Paul Pelosi, really boils down to 3 things. First, a laser-like focus on tech stocks. Second, using call options, which are basically leveraged bets that a stock will go up, to really juice the gains. And third, having the patience to just hold on to those investments through these massive growth cycles. And this timeline, this is a masterclass in seeing that playbook in action. It's all about identifying and then riding these huge transformative tech waves. First, it was the FANG stocks during the whole mobile and cloud boom. Then you see this very clear pivot into the building blocks of AI, semiconductors. That move perfectly positioned the portfolio for the super cycle we're in right now. All right. Let's drill down into a specific example. Let's look at a single case study to see how this playbook can create a multi-million-dollar win, focusing on one of the biggest trades from last year. We're going to look at a real blockbuster trade from 2024, and it involves the semiconductor giant Broadcom, a huge player in all things AI infrastructure. Now, you've got to pay close attention to the timing on this one. In June of 2024, 20 call options were bought. This was just a few weeks before the company announced a massive 10-for-1 stock split, a move that, predictably, sent the stock soaring. Then, a year later, those options were cashed in. So by exercising those options, they got the shares for a post-split price of about $80 each. You know what the price was on the open market at the time? Around $275. I mean, that is an instant on-paper gain secured at a staggering 71% discount. And the result of that just one, impeccably timed maneuver, an estimated gain of $10 million. And honestly, it could be quite a bit more. Okay, so this kind of timing, buying options on a chip maker right before a major stock split and a massive AI rally, well, that inevitably raises the central question that hangs over this entire story. Critics, like the Republican National Committee, don't mince words. They argue that this consistent pattern, trading just ahead of major legislation like the CHIPS Act or big industry events, points to a huge informational advantage that the general public just doesn't have. Now, the official response has always been the same. It maintains that these are just the independent actions of a very savvy private investor. Her office says the trades belong solely to her husband and are made without any improper information from her. At the heart of this whole debate is a piece of legislation called the Stock Act. It was passed back in 2012 to create transparency and prevent this exact kind of scenario. But critics say that the 45-day disclosure window still leaves plenty of room to take advantage of information before the public ever finds out. So, putting that whole debate aside for a second, no matter where you stand on it, what can an average person, a regular investor, actually learn from this kind of high conviction approach? Well, it seems like there are four key takeaways here. First, embrace these huge, transformative tech themes as the core of your portfolio. Second, don't be afraid to concentrate your money in a few areas you really believe in instead of spreading it too thin. Third, be patient, hold for the long term. And finally, look for what they call asymmetrical bets. Opportunities where the potential win is just massive compared to the initial risk. Now, the only reason we can even analyze all this is because of public disclosures. But that window is closing. Nancy Pelosi has announced she won't be seeking re-election, and her term is up in January 2027. And that kind of leaves us with one final question. After almost 4 decades of public disclosures, is Wall Street's most watched political playbook about to go dark for good? Or is the legend of the Queen of Capital Gains just about to enter a new and much more private chapter?